All right, everybody. I have a special guest for you all today. I would like to introduce my private client, Mari Ramirez, and she is, I'm going to just say I don't know, should we call you like a money wizard, a tax wizard? What do you want to go by?
Oh gosh, I don't know. I like all those names though. I'll take all of it. Queen, anything you can, yeah,
Yeah.
anything.
So we were just talking before we started recording, and I think so to give everyone a sense, you run an accounting firm, but something that differentiates you, actually, I think there's a lot of things that differentiate you that we can get into, but I think beyond just accounting, you also do bookkeeping, which is super helpful for a lot of businesses. So we're going to dive in to, I want to know, first of all, a little bit about you and your background. And then my Instagrammers came out with all the questions that they want to know.
Oh gosh.
And
I'm
so,
excited.
so I think this is either going to hopefully end in them feeling more empowered in their relationship, like if they have, they're doing their own stuff or if they have an accountant. But really, I think everybody should just come hire you. So we'll see how they feel by the end of it.
Yeah, that sounds great.
But
Let's hear more.
before we dive into any of that, though, I'm curious, can you give us, because you also, I remember you mentioned in one of our sessions, you worked at like one of the big accounting firms. So you actually have your own employee to entrepreneur story. And I don't think I've ever like really heard it. Could you give me like the 2 minute version?
Oh yeah, 2 minutes. Let me try to get it down. I'm just kidding. I worked for bigger, a few bigger CPA firms in Austin and small ones. And, nothing, I didn't work for like one of the big four firms, although I never had the intention of doing so. So when I got my master's in accounting I got my master's at Texas State, we were kind of all solicited by Big Four and IRS and that kind of thing. And it was just like never a thing for me. I knew I wanted to work for SMB clients. I wanted to have small to medium business clients. I knew I wanted to do a lot of startups. And so I knew that wasn't, the thing for me. I had already been in public accounting before that, and I had already worked for a decently sized CPA firm. So I kind of knew what that entailed. So I was one of the people in my master's degree program that was already in public accounting as it was. So I kind of had an idea of what I wanted to do. But I did work for a few different bigger CPA firms here in town. One of them's actually got bought out by a bigger firm that's Carswell Ingram. And then, I did work for a couple of other places in South Texas that was bigger CPA firms. And then I worked for small ones, and I knew that that's what I wanted to do, is own my own CPA firm, be able to help smaller clients. And I knew I wanted to continue that route. I did get pregnant in college, so that kind of sidetracked me, but I always knew I wanted to do accounting probably since I was like in high school.
How did you know? Like, what was it about you as a kid? Like,
Oh gosh. You know what? Honestly, I'm terrible at math. Like, I know I always say this, like if you've heard my other podcasts, like I'm not good at math, like at all. Like I can't do numbers in my head. And you actually get worse doing accounting because you're just so used to like adding numbers like electronically and on Excel and my tax software and that kind of thing. So you actually kind of get worse somehow. My assistant's a lot better at doing numbers in her head than I am by far.
but it sounds like that's not even a skill to be an accountant, right?
Skill, no. Yeah. But I always was really good at math, and I loved algebra, and I loved figuring out numbers, and I've always really been good at memorization of numbers, which is completely obsolete now. Nobody needs to know phone numbers or any kind of numbers, but I do remember numbers really well. So I knew that I wanted to be a numbers person, and money was always interesting to me. I grew up really poor, so we didn't have a lot of money. And so that was one of the things that I wanted. So honestly, the reason why I wanted to become an accountant is because one of my best friend's dad was like, you should be an accountant. You can make a lot of money. So that's really what I was just like, I want to make money. That's it. So one of my friends told me that's how you make money. And I knew I liked numbers. And so I was like, it can't be that hard. Right. So that's exactly that. That's
but it sounds like though, like it's not just about making money, because the way that I've heard you talk about it, it's so interesting. Like when I think about accountants, I don't really think about like, I really want to like go hang out with this accountant. Like I just have a thought, like a vision in my head of like when I think about accountants. And then like in working with you, like in our coaching relationship, and I wasn't surprised at all. We could talk in a minute about like when I was lurking your Instagram a minute ago, but like the way that you're able to work with businesses is like you have the human connection level, you have the strategic thinking to help businesses figure out like where they want to go. Like,
Mhm.
I don't know. I'll just say from like the consumer side, when I have worked with accountants in the past, they kind of feel like commodities to me.
Mhm.
Like, I'm just like, I don't know, they're so like, it's just an accountant. It's like
Right.
interchangeable, but that's actually not the experience people have when they come to work with you. Like, I know you were just saying basically when someone comes to work with you, they like stay forever. And like, that's how you've grown out of your business is their
Right.
business grows and then your business grows because you like work with them deeper. So
Right.
like, there's something
Well,
else
a big
about
part
you.
of it is, because I have these relationships with these clients, they become my friends. And it's interesting because when I worked at a big CPA firm, of course, like back in the day, I'm 43. So it's been a while. I've been in public accounting for 17 years. So it's been a long time. So, you would bill your time. You would, you know, take track of every single hour, every single minute. And it was like a lawyer. You would bill for 15 minutes, right? It's
Yeah.
not so much that way. It's kind of grown from that. It's a little bit more fixed fees now and value added pricing, that kind of thing. But back then, when we used to do that, what would happen is the clients would fail to call you and tell you what's going on. They wouldn't make decisions with you. They would just do stuff without actually talking to their accountant because they didn't want to get a bill. And so a lot of times I would develop these relationships with clients and I would say, just text me or call me. And I wouldn't bill for it. I wouldn't add it to my time. I would just do it for free. And I developed all these really deep connections with people and relationships with them that they trusted me. So I've kind of moved that forward in my own business. I don't ever charge for phone calls or text or emails intentionally because I want them to feel like they can communicate with me. They can talk to me. They can let me know what's going on. If they're making decisions in their lives, like I want them to talk to me about it. And so I end up being, weirdly enough, a therapist. I'm like, am I a therapist? I feel like I am sometimes. I kind of know everyone's problems and things that are going on and making decisions with them and then talking it through. It's just kind of one of those things that happens. And I do end up being friends with them. It's been really hard, obviously, doing Zoom meetings, having connections, because I'm always going to lunch with people and having happy hour and let's talk work and, go have lunch. And so it's, but it is nice. I am friends with pretty much all my clients. Like I can't say that there's not a client that is not my friend. And I've become really best friends with some people that are my clients. So it's great. But I think that's also what's different. I think people want that, that person that they trust with their money to make decisions with them. It's someone that they trust as a person, right? It's not just some random person that you really don't know making these decisions for you or with you. So I think that makes a huge difference
Yeah.
overall.
Yeah, I think it is like the human connection. We just like moved. I'm working with a different accountant for this year, and it's so interesting. I do appreciate it. She's got like just a whole portal. Like, I don't even need to talk to
Yeah.
her to like send anything in. But I was just thinking about it yesterday. I'm like, oh, I'm not building any sort of human connection with her.
Mhm.
And like, I think that would make it very easy for me because I don't have, right? Like, I haven't developed any sort of, and I think it's interesting. Like, it doesn't even need to be like a one-on-one, like a
Right.
text. I think people like just my podcast, people develop a relationship with me, but like
Right.
we forget in this like tech savvy world that like human relationships is still how businesses run. So yeah. Oh, I love it.
I do have clients all over the United States. And so interestingly enough, I've had relationships over many years with people that live in different states or travel people or whatever. And so, we live in an age where the world is flat, right? So it doesn't even really matter where anyone's at, and you could still have a really deep connection with them. But yeah, I think the money and the trust thing is really important. And also for me, since I have a lot of monthly clients that I deal with, and we're looking at lots of different things and we're looking at their monthly finances, and so it's like an ongoing conversation and lots of review of that kind of thing. So I end up being really good friends with them because they're just constant communication.
Yeah.
Not so much always of the yearly clients, although I love them too. And I wish I could hang out with everyone. I think that's part of the problem. Right.
But it is like it's like your monthly, those people that are you working
Yeah.
with on like a
Yeah.
bigger level. And I think I have like some questions as we move on.
Yes.
People had questions around like when they should be like looking to hire, that kind of stuff. But before we even move into that, I want to actually set the container for like everyone listening to this, because you mentioning trust and making decisions around money. I think not only is that so important in like a vendor, like hiring an accountant, but I also am aware that some people might listen to this from the mindset of I'm not good with money or like I don't know enough. And I just want to set the stage that like you need like as much as you can, just like plop those thoughts out of your brain and like put them to the side, because this episode, if you decide to listen to it, it can be a tremendous tool and you can learn from it and empower yourself. Or you could decide to keep those thoughts and have shame around money and have all the thoughts. And you could use this episode as a way to weaponize it against yourself and spin out and have drama. And so I just want to say it's important, like the mindset someone's at when they're listening to this, because I think it's not just trusting the vendor. Like I was thinking, I was just coaching a client the other day and she's at like the multiple six-figure level, but she has thoughts about her relationship with money. She grew up super poor. And so she has a sort of like lack of trust with herself and money. And I was coaching her around her accountant, her relationship with her accountant. And it was like important. It's like, no. Like we have to empower ourselves. Like our vendors are there to help us. Our vendors aren't there to like trigger our shame. So,
Right. Well, it's interesting that you say that, because I always say, like, we live in a capitalist society, right? It's so easy just to walk out the door and start a business, right? But where are the tools? Did you learn that? Did we get taught how to start a business and do all the taxes associated with it? To, figure out what the words that we use in the business language? I think I think that's a big, huge thing. It's easy to start a business, but it's not necessarily easy to continue to manage that business from a business background. Yeah. And I think that's always the missing piece. And I think that's where I kind of come in, and I do a lot of, as much as I can, training and education. So pretty much like the majority of my job is just training and education on that side, that piece of the puzzle. Right. When it comes to taxes, when it comes to business management, when it becomes accounting and bookkeeping and budgets and forecasts. And so sometimes it's interesting because some clients are like, really want to learn. Some people are like, I don't want to know anything about it. Here, you take care of it, sure. Which is fine. I'm down to help whatever that person wants. So it's interesting because some people do want to learn about it and some people don't. But either way, they should have someone on their side to kind of help them whatever way they want to do it correctly.
Yeah.
It's the people that don't do it correctly, just put it aside. That's actually the worst you could do. It's just be like, I don't want to think about it, because then like 5 years from now, they're like, oh shoot, I kind of forgot doing 5 years of taxes, which happens, by the way, all the time. Like people are like, this is the worst situation. I haven't done my taxes in 4 years. I'm like, let's do it, girl. Let's get it going. And I can't tell you how many people are in that situation. They are just so scared to look at it. And sometimes you just gotta face it and go straight in front of it. And then when you get past that point, then you could do more planning and futuristic thinking things. You don't have to know every detail. You don't have to know accounting. You don't have to understand taxes. It's just like a basic knowledge and like getting things set up to where the things that you need to know. And I think that's pretty much the majority of my job, to be honest.
Yeah, I love it. Well, let's set the frame, because I know that you work with a lot of different types of businesses, but my people, my audience, I like thought about them. I feel like there's like 3 categories of people. Mm-hmm. So there's people who are like coming into my mastermind, and they are employees they're like working hard. There's a $10,000 minimum to come into my mastermind. They're like working to get to the minimum so that they can come into the mastermind. So those are the pre-mastermind people. That's where they're at. Then I've got like my mastermind people, and they're like making some money. They're coming into the room. They're creating $10,000 a month is what I set it at. And now it's like in the first round, we've got people at like $15,000, $20,000, $40,000 months. Awesome. So, like between $100,000 and $200,000, I would say. And of course, people in their first round, maybe they're not quite there yet, but like, if it's helpful to know, that's about what they're making. Right. And then for you clients like you guys, my private clients post mastermind, it's that multiple 6-figure level, scaling more towards like $500,000 or $1 million. Mm-hmm. And so it is a wide range. So I just wanted to set that frame. If it's helpful for you to be like, okay, for the pre-mastermind people, like think like, this is what you want to look at. Mastermind people, this, post mastermind, this, I think might be like just a good frame of like words we can use so people can be like, oh, I've got to tune in again. Right.
Right.
Yeah. Okay. And I think actually another good thing to like, they're like service-based business owners. So, like I'm trying to like a lot of coaches, consultants, marketers, photographers, interior designers, financial planners, accountants, right? Like service-based businesses getting run out of their homes. So there were some questions about that. Yeah. So that's the frame. And then let's dive in. I I got a really funny question. I just want to start with that one. How do you know if your accountant sucks?
Oh, wow. That is such a hard question.
I got that question and I was like, oh, like, it's so interesting because I haven't had it like that. I actually reframed it and I was going to ask, how do you even know if your accountant is good or bad? Right. But I think about it from like a lay person's perspective who's working with an accountant. Like, how do you even know? Like, we've worked with like several different accountants over time. And as a lay person, I have no idea how to even measure as a metric if they're any good.
Yeah. I mean, that's so hard to say. I mean, it's always nice to get a second opinion. Sometimes I'm definitely like there's industries that I work with that I know a lot more about. And I think there's some CPAs that, and they'll say straight off the bat, I don't really work with that industry. So I'm not entirely sure. It's funny because someone posted on like my entrepreneurial accountant group, like an accountant was like, hey, you guys, I got a new client and she makes a lot of money doing XYZ or some kind of service business. So I Googled her and apparently she does OnlyFans. I'm very confused. And it was like, oh my God. I was like, boomer, like what's happening? And so like we were all commenting on it, like make sure, you take all her industry expenses. Like, we're trying to give him advice, but he was like very confused about what that meant as far as taxes and accounting. And I think it's, straight up, you should just ask an accountant, is this an industry you do very often? What other clients, like I will be very straightforward. When people are like, I have this type of business, what can you give me examples of other clients? I'm happy to say I have this client that are very similar to you. And as long as I have the okay from that client to use that person's name as a reference, then I think it's totally fine. I think that's one of the good ways, because I specifically have had so much experience in those specific industries that I feel comfortable working with them. So I think that's probably the first thing that you would find out is to make sure they have experience in that industry. As far as sucking, like we do disagree. Now I can tell you from my accounting groups and my CPA groups, like we disagree on a lot of things. Like some CPAs do take a more conservative approach. Some of us don't, like, especially a lot of the younger ones, like a lot of the older mindset have some ideas about IRS that aren't necessarily true anymore, but it's been kind of ingrained over the years.
Yeah. Like they're super fear-based. I remember you talking about like very like scared.
Right. Which I've done so many IRS audits. I kind of know what to look for and I feel comfortable. And some CPAs will not even touch IRS audits. So I feel like maybe asking that question of, have you done IRS audits? Because there have been times that I've gotten new clients that they're like, well, I went through an audit and my CPA was like, I'm not touching it. I'm like, what? That's so crazy to me, because I've done so many audits by now that I've gotten new clients like, I'm going through an audit. Will you help me? I'm like, absolutely, let's do it. Like, and we go through the process and we figure things out. And, honestly, IRS agents are very reasonable people. They're not crazy. They're not mean. They're actually terribly nice. So I think knowing that background is probably important too, because I know what they're going to be looking for in the long run.
Yeah. So like, it sort of like depends on if the person is like, oh, I'm being audited, you probably want to work with an accountant who's like been through that process. I'm curious. So I like your question about the industry, because I actually got another question and it was from a woman who's a photographer. And she said, is it important to hire an accountant that specializes in photography? And I'm curious, like, does it need to be that specific? Because I just think about like my people, they're just service-based businesses. They run stuff out of their home. They like don't, right? Like it's going to be like very similar, even though the industry is different.
Right. I don't know necessarily that specific, although I have gotten questions like that's specific, and I'm happy. I have so many photographers. So it's like, sure, whatever you need. But yeah, service-based industries are pretty similar. Although I can tell you, like, when we start getting into like photography and then like actors and like musicians, and then we're talking about wardrobe and costumes and things that other service-based industry people cannot deduct. So it gets a little bit more, I should say, industry specific. So I think you can ask that specific question if you want, because like I said, there are going to be things that a photographer can take that as an accountant, I can't take. I wish I could take my wardrobe. That would be amazing. Right. But those kind of differences, I think, because I have had discussions and arguments with other CPAs that they're like, what? No, I would never take a wardrobe. And I'm like, they're costumes. So we've had that discussion.
Yeah.
Before, and I think it might be a little bit more important. So it can be very industry specific, like this OnlyFans situation. Like if you were a stripper, and I always give this example, you're a stripper, you can deduct your boob job, right? That's like one thing a client told me that's the only thing she remembered from her tax class, but nothing else about taxes. But like, no, I can't do that. No one else can,
Sure.
right? It's so very industry specific. I think it's okay to ask, like, do you specifically do photographers? And because then they're going to be like, wait a minute, what about this? Or what about that? Like, I would specifically be like, don't you have a lot of travel or mileage? Like I can see that. Do you have a personal credit card that you use that maybe we need to add on there? Like, I think outside of that box when I'm looking at those kind of details, and maybe another accountant. Now, that being said, we're all super busy during tax season. So like, be nice, send us cookies, like love us, and like be patient with us, because like we're working all the time, probably not washing our hair that often. And like, it's just craziness. So everyone's coming at us from like everywhere. So I wouldn't say like during tax season, have like some grace with accountants. Like they're not, no matter which accountant you go with, they're not going to all respond to you super quickly during tax season. So I think that also, that wouldn't be a way of them sucking. Like, we're all super crazy busy. And to be honest with you, like, we need more accountants. So when you all are interested doing accounting, like you should do it because it makes a lot of money. But like, there's just like so much work. There's so much work in the accounting world. Like, I'm not just talking about where you and I live, but like all around the United States, we are lacking accountants. So, so we're all really stretched thin, and we're trying to find and train other accountants to help us. And it's great. And we want to take on new clients, but at the same time, we're also super busy. So especially during tax season, right? So,
well, I love though, like, I don't even know if you didn't point it out this way, but just the way that you mentioned, like the questions you would think to ask a client, I think are important. Like, I don't know, the more I get into like mindset coaching and I'm like, oh, it's like the way a person thinks. Like, I just watch the way people think, and me, like, I'm listening to you, but I'm also watching the way that you're thinking about it. And I'm like, oh, like you would have like the elevated awareness to ask those kinds of questions. Whereas I think maybe some people would just be like, yeah, just like give me your stuff and I'll just like take what you give me, and I won't even like bother to like ask any additional questions. It's sort of like just the creativity and resourcefulness.
I hate to like point at H&R Block or any of those kind of Liberty Tax, but like those places,
I don't think they're listening. So if you have something to say about them.
Well, I mean, I think a lot of those, they get trained in like 3 months and then they're doing tax returns. And so that's kind of how they're taught, like just put the numbers in. It's like quantity versus quality, right?
Yeah.
So they're just trying to jump them out. Surprisingly, some of those returns are more expensive than mine, which always makes me mad. When I get in a client, we'll
coach on that next week, Molly.
Yeah, I'm like, what? Because sometimes they do a percentage of the refund and it's really huge. And I'm just like, it upsets me. I'm like, this is more than a CPA cost. And these people aren't CPAs. And it's just really annoying. But anyways, they're just spitting out things. So I think sometimes when they get so busy and it's quantity versus quality, they're not asking those questions.
I love that. Like, you even saying in H&R Block, they're not CPAs. Like, I don't even have enough awareness of accounting to know that. Wow. And I think people that are listening probably don't, right? So like, that's the kind of thing that is probably useful for someone to know. It's like, I mean, it's a little bit of like, you get what you pay for.
Right. Well, I think sometimes the owner, like I've been solicited, like, hey, H&R Block wants to buy you. You like, there could be a CPA that runs it, but all the tax preparers that work there are not CPAs generally. Okay. They just train people very quickly, and they just I think it's like a 2 or 3 month process that they train. Okay.
That's good to know. All right. Yeah. That's very important. Hopefully everyone, I hope everyone has their notebook. Right, here's another one. And this is, I know, something that so many new entrepreneurs spin out about. Do I do an LLC? What do I do? What should like blah, blah, blah. And I also, so like, I think if you could think of it from like the pre-mastermind, mastermind, post-mastermind structure, because I also know some of my private clients, especially like post-mastermind, and some of them in my mastermind who are at the 6-figure level, I've got like a few of them right now. Like, it seems like, and I don't even know, like I'm just now looking at like transitioning into an S-Corp. So selfishly, and for my private clients who are like at that higher level, I'm curious, like, can you just talk to
Yeah,
us like we're
I can.
5-year-olds and
I
explain?
start from the beginning. So like when someone, I mean, honestly, I'm very pro get an LLC from the beginning because it kind of trains you on the things to do straight off the bat. It's kind of like, oh yeah, I've been in business 5 years. I haven't even got an LLC. I'm like, whoa. So they're having to be trained from the beginning, like, and they've already been in business for a few years. So they think they're kind of intermingling everything and everything's a mess. And so it's like you have to kind of retrain your brain. So I'm very pro, let's do an LLC. You started a business, like let's get it going. Let it have its own life and
Yeah.
be something, right? And I'm very for those pre-mastermind people. Like I've worked with a lot of people that are like, I have a job, but I also have the second job. I'm like, do you want to get out of your first job? Let's try to make it the second job your first job. Like if that's what you love to do, just do that. So I do have a lot of those conversations, and I'm like, let's LLC it. Let's do all the things to create the money and the accounting and the processes around it. Because when you do that, then you start doing things like budgeting and start looking at what you're making. And like when you start looking at those numbers in a very, method that's just that one specific amount, like it's not intermingled with your day job. It's just, this is the money I'm making for my side job. And how do I make that grow? And what do I need to do? When you start looking at it like that, then you start actually making more money and start planning around it, right? Because otherwise, like you're just doing a side job. It just becomes like a thing you're doing, right? And it's extra money. And there's no incentive to do more if you don't want to do more. Unless if you want to quit your day job and want to work on it, then you actually have to work on it. And sometimes doing an LLC, creating that accounting procedures and creating those books and putting them together and actually practicing, okay, let's do the bookkeeping for it. Whatever that means. Is it you? Is it me? Is it for you? And then I train a person on how to just keep up with it. Then you're looking at it on a regular basis and be like, how do I make more? Because when you're not looking at it, it kind of goes in the back of your mind, right?
Yeah. This is like, it's funny because you're talking about it from an accounting perspective, but all the time in my master, like there's so many people that like come into work with me and they're like, no, I'm like, I have a business. I'm not making monthly goals. I'm like, what? Like, because they don't,
Right.
And I think it's interesting actually, because like people not looking at their accounting, I think is often like shame and thoughts around money. And then people not looking at like their business and their monthly, it's the same thing. I'm like, you're never gonna, unless we look at it, we can't actually face it and work with it and like build awareness around it. I love it.
Well, because some people are like, I think I'm making this much. They just don't even have a clue. They're just like, it's extra money, right? So they don't know what that means for them. And I think once you put it in the forefront, you're like, oh, wow, I am making X amount and I could be making more. And then you start doing numbers. Like if I had this many clients or this, then you start like, I could actually get to this goal. And so I think it becomes a little bit more attainable to be like, I can quit my job at this point in time.
Yeah.
So I'm very pro LLC in general because of those reasons. It forces you to get your shit together. And then when you do that, you kind of, get the accounting stuff together, you put, stuff together, because really with an LLC, the thing about the LLC, it's just with the state, right? So it's the IRS doesn't really care, to be honest with you, when you start an LLC. I mean, they do in the sense of you create it, you do an LLC and you also apply for EIN, which is not hard. You can just go to the IRS website and apply for EIN, but you have to do the LLC first. And when you do the LLC, that's for the state. So what it is it's limited protection. It's basically your corporate veil of your assets from your business and your assets for your personal are legally separated.
Yep.
Right. Assuming you don't intermingle funds, right? So when you open an LLC, with your state, and then you apply for an EIN. So you have an EIN number. You take those two documents down to a bank and you open up an LLC bank account, right? And so from there, you run everything through the LLC bank account. Your income, your expenses. If you want to transfer money to yourself so you can have money, you can transfer money. You just can't go to HEB, buy groceries with your LLC bank account if you can help it. Sometimes you can't help it, like, oh shoot, I forgot my personal card. Like there's gonna be one-offs. That's fine, but it's just not like over and over again, right? And that's what protects that LLC. If the LLC got sued by anyone in that state, you're legally protected as a personal person. and your personal assets, right? So that's the whole idea of an LLC. Now from there, like the IRS doesn't really care in the sense of you create an EIN. If it's one member, it's just you, an LLC, it's a single member. It's still a sole proprietorship. It looks the exact same way on a tax return as if you didn't do an LLC. Same exact thing. So in order to make it not the exact same thing, you have to do elections, which you could do the S-Corp election. So you could be an LLC or an S-Corp at the same time. So people are like, what's the difference? What, should I be an LLC or S-Corp? I'm like, you can be both. Like those are two separate, those are the same thing in the sense of like, you could be an LLC in your state and have an S-Corp with the IRS, which is a federal election. Now,
now I feel like I want to slow it down because I feel like people are probably like, there's a lot of words, right? Like, so, and so for like, I want to just say for people who are like, oh my gosh, they're like already starting to spin out about LLC or EIN. Like seriously, how long do you think it takes? I think it took me, I don't even know, like 20 minutes to register. Like, it's like, I really want people to understand that this is not a big fucking deal. Like,
no, it's not. It's not. I know I'm saying words that are not, you know, that, you know, use that often, maybe in everyday talk, but it's really not that difficult. Now, I do have a whole worksheet I show people for an S-Corp and what that looks like and what the differences are. Yeah. I have this whole thing I draw out.
How does someone know? Like when are there any rules of thumb of like when someone should start looking at?
Listen, so I was on a panel a few years ago with two other CPAs.
Okay.
Me, another CPA, and a CPA that used to be an IRS agent, right? And we got asked a question, when would it be best to move to an S-Corp? Like, when's the best time? My personal opinion is if you're making $30,000 or $40,000 net income, right? As a sole proprietor LLC. And the IRS agent / CPA, he agreed with me. The third CPA was like, no, I think $100,000 gross is the best. And me and the IRS agent / CPA, who's amazing, I love him. He was like, listen, as an ex-IRS agent, S-Corps are less audited than sole proprietors. And you actually can still benefit a whole lot from the S-Corp, making that little. And I have clients that are writers and artists that make that small of amount, but they have a really good still tax savings. Now, this is not something that you have to make a decision on, like right straight away. You open an LLC, see how you're doing, and then work with the CPA to make those decisions. I don't think you do them on your own. I think you evaluate and see how it goes. Sometimes we do the S-Corp election at the end of the year. We're like, oh, wow, you made this much. We have to run a payroll for yourself and actually do the S-Corp election. And so we do all of that.
Like, now, what's that amount? So I know you're saying like, oh, I think 30 or 40 would be a good amount, but what's the amount where you're just like, dude, what are you doing? Like, we've got to look at
100,000. If you're making over 100,000, you absolutely need to be an S-Corp. Okay. Absolutely.
Like, see, this is plain and simple. Thank you. All right, good. That's so, okay. So people who are like at the lower level start thinking about it after 100,000, like definitely. Right. And like, can you like sell us on the S-Corp? Like what's super juicy about it?
Well, I mean, there's bad parts to it. Like you have to be an employee.
Tell us the bad parts.
Well, I'm telling you the bad parts. Well, the bad part is you have to be an employee of your own company. And that requires some kind of things as in, you know, payroll taxes and unemployment and those kind of things. Those are things that you have to deal with that you wouldn't have to deal with before. But the good part is you have a big tax savings. Like when you're a sole proprietor or a partnership and it's just you and your husband or wife and that's it, you still take that net income and pay 15.2% taxes on it. Whatever that net income is, you don't get a choice, right? With the S-Corp, we get to decide what that number is. You do still have to pay that self-employment tax, but we make that decision through running payroll on deciding what that number looks like and what tax savings it is. So like every S-Corp that I have, I can tell them at the end of the year, and hopefully you get this too, exactly the number of savings that they have. Like this is how much you saved by being an S-Corp.
Yeah.
And so you legitimately have an exact number of the savings and it's so worth it. Now there's, you know, an S-Corp requires a whole separate return. It's not in your personal return like a Schedule C. Now it flows to your personal return, and that's how you pay taxes, but it has its own return. Now, the good part about that is the IRS would audit that less. And let me tell you why. Because it has a balance sheet on it. Like you actually have to keep up with your books and have a good set of books. And becoming an S-Corp sometimes makes people be like, okay, I have to get my shit together. I have to do my accounting. I have to have someone do my bookkeeping. And we have to, we have to have a good set of books. And I do like to have that kind of behind there. Now, the balance sheet is just like, your assets and your liabilities. It's nothing complicated. It's just that for an accountant or an IRS agent or anyone else that will look at that, like a profit and loss statement, if someone says, hey, look at my financials, what does it look like? I don't know. Give me the balance sheet. I want to see the balance sheet. If the balance sheet's messy, if I can't trust the balance sheet, I cannot trust that profit and loss statement, period. And so I think the IRS thinks that way too. I mean, I can't tell you for sure, but I think that they trust an S-Corp or a partnership return much more than they would a Schedule C on a personal return, because that's just the profit and loss. Yeah. You could just make up any numbers you want on that. Sure. So it's just harder to prove what those numbers are. Sorry, I'm saying a lot of words that.
Well, I mean, it just sounds like there's a lot of tax savings. It's like after 100,000 for sure, start looking at that. And then it's like on the other side, it is also just like, if people like care at all about like audits, it seems like there's like less chance on the other side of there, which it just seems like it's not a big deal, but it's like, then you just save yourself a headache.
I do need to add one thing, because I don't know what state, if other people in other states, Texas and certain other states, you can be an LLC and an S-Corp. Some other states like Wisconsin, you can't do that. Colorado, you have to be a specific kind of entity. So anyways, but just check your state rules or check with the CPA.
Yeah. Like, and you work with people from like, I know you've got like you have employees that work in different states. Yeah.
Yeah. Yes,
yeah. I have whatever state you're in, you can come and talk to her. When should someone, I got this question, so it's quite specific. When should I hire a CPA? And then also, when do quarterly payments start when you're new? And then she specified LLC.
Okay. So this is the interesting about estimated quarterly payments, because I get this question a lot, actually. It has what's called a look back period, right? So you didn't have to pay taxes last year. And when you did last year's taxes, it didn't spit out estimated tax vouchers. You're not required this year to make estimated payments at all. Now, I have a very different viewpoint about estimated payments that a lot of CPAs don't agree with. So just get ready, because if you do talk to another CPA, they're going to be like, what? She said, what? So I do have a very unique stance on estimated payments. I think estimated payments are generally for people that do all four, that are really bad with money. Like they make those payments because they are really bad with money. Now, the estimated tax penalty is the lowest penalty the IRS has, right? And if I tell anyone to make any of those estimated payments, it's usually the last two. I have millionaires that refuse to do the estimated tax payments. They're just like, it's just not worth my money to give to the IRS to get no return back, just for them to keep it throughout the year.
Like they want to keep their money making more money in investments versus like paying ahead of time. Exactly. Yeah. Okay.
Well, the other thing is, and this is my problem with service providers or people that if it's just you, a solopreneur that's doing it yourself. Well, I'm different because I have employees. But the thing is that if you are the only person doing your job and then you get sick and you've done these estimated, you did the first quarter, you did the second quarter estimated payments, and then you get sick and you can't work for 3 months. I don't know, maybe something happens and you can't work. You can't ask for that money back at all. And so that's probably my biggest problem, is that happens with people where they make these estimated payments and then they can't get the money from the IRS till the next year, right? And they have no savings, or maybe they're using their savings up for those 3 months. And it's kind of one of those things that they're screwed. So what I always tell everyone when we do have estimated payments and they do spit out, let's put that into savings account. And that's like your tax savings, right? We can always do the last two or just see how the whole year. I like to see how the whole year ends up, maybe by the third or fourth quarter, to see, okay, should we make a payment? We can make a payment. When it gets closer to the end of the year, that's when I like to do those estimated payments, because you can lower that estimated tax penalty anyways. And again, it's like super low. It's just not worth it. I've looked at it and we looked, oh, it's going to be $50. Okay, why are we even
like to pay a $50 penalty versus keeping so much money out, like in other investments or whatever. Yeah.
Sometimes it's just better. And I say that a tax savings, it could be something else, maybe crypto. I don't know, whatever you feel like would make more money, that it's not just giving it to the IRS and letting it sit there.
Yeah.
For me, I feel like if something were to happen to that person and they can't reach it again, I think that's my biggest fear for people, is that they can't reach it, because I've seen that so many times where people are like they do the estimated payments and then something happens, they have to take off and they're struggling to make money. And I've seen this in over 17 years. And so I'm like, I came to a viewpoint of, why don't we put that into, maybe not necessarily invest it, but into some kind of other savings,
like a liquid account,
right? Something that you can access it. And, so that way it's there, you don't use it, you don't touch it, you save it for taxes. And we can do those estimates if we wanted to in the third or fourth quarter, like the last two or the last one, if we wanted to make a big payment. But for me, financially, I feel like it's not worth it for some people. So, but that being said, now when you do the look back period and you look back and you didn't owe taxes, you don't have to pay estimates, but doesn't mean you shouldn't start saving for taxes, especially if you're starting to make money, because then you get a huge tax bill and then you have to do a payment plan with the IRS. It's the whole thing. And then you get stressed out. So sometimes it's just like looking at it, figuring out what the tax is, and then just saving it and knowing you're saving some money for taxes. Now, the other thing I always tell everyone is like, we can do estimates and put savings in there. And then at the end of the year, like that's kind of like your refund. Like when the next year, when you're doing your tax return, you're like, oh, you saved 20 grand, but your bill's only 10 grand. You're like, cool, I got a $10,000 extra. Yeah. So sometimes it ends up being great and there's no tax. There's really, like the penalty is like so ridiculously low. It's like, it's worth it just to keep that cash.
Right.
So, so I do have a very different approach to this. And then when you do your return, it does spit out estimated vouchers. And so your CPA or tax preparer, or even if you're doing it on your own, it'll spit out like, these are your next year's tax, your estimates. So it'll spit out for you what quarterly that you're required to do. And then you can make decisions based on those numbers, because those are your minimum required payments. That makes sense.
Yeah, that makes sense. Okay. Now I want to talk about really fun things.
Oh yeah.
Deductions.
Well, that's my favorite.
And I think because people are running stuff out of their home. I know that there's like, you can do this whole calculation and like split up your, I don't know, all your utility bills and your square footage of your house, like all of that. Or there's like a standard deduction. Like, so for people who are like working from their homes, what are like the super fun? And I don't know if I have any strippers that are going to deduct their boob jobs, but I know there are some things that would be like super industry specific, but like generally keeping in your awareness is like service-based businesses that are run out of homes. What are like the really fun places that people can like just keep in mind are deductible? And yeah.
So I always tell everybody, if you question, like, is this a deduction? Like, maybe this is a deduction for my business. I always say it probably is, or probably partially is, right? Like there might be a partial expense, but we like maybe back out your personal use of it. So depending on what it is. Now it is very industry, when people are like, oh, give me a list of deductions. I'm like, I can give you the simple basic ones, office supplies, marketing, blah, but everybody already knows those, right? Yeah. But like, do you use that for work? Yes or no? Is it partially, do you use it for work and for business? Do we need to back out your personal use of it and have a year earmarked for a business use? Like those are the kind of questions we talk about. Now, when we're talking about home office, I always explain in a home office, I call what's called direct and indirect expenses. Indirect expenses are the things you were just talking about, like your rent or your mortgage interest or your property taxes, your repairs and maintenance of your house, your internet cost, your utilities costs. Those are indirect costs that are allocated per square footage, right? It's per square footage of your whole house versus square footage of your office, right? Those are like the home office calculations. And you can go back and forth between standard or deduction. And the standard's just based on your square footage of your office. And then the actual is like based off that allocated indirect cost times the square footage of your office allocated to the square footage of your house. Now, those are the indirect costs. That's an easy calculation. It's not hard. I always tell everyone, get me the totals and then I'll allocate it. I just want the totals of what you pay for everything in your house, indirect cost wise. And then it's easy calculation, no big deal. Now, the direct costs are the things that are way more interesting because the direct costs are everything inside your office. So like you can see my office right now in my house, like I'm sitting on a Herman Millen chair, which is deductible 100%, right? I'm sitting, there's a desk, there's a couch, there's everything inside my office. There's some artwork. Those are direct costs allocated directly to my office. Right. Oh, and you have stuff behind you too. Like you have paintings and stuff behind you. Hopefully you deducted 100%, right? Because that is part of your home office. So now that being said, some of these paintings I bought before I got this office and I bought it personally. So you can place things in service. So like if I bought this desk like 5 years ago and then I started my business and I bought this desk for like $100, I can place it in service as of like today for $100 and call it like an investment. Now you can't do fair market value. It has to be like actually what you paid for it. Now everybody's like, I can't remember what I paid for it. I'm like, give me a reasonable cost. It doesn't have to be perfect. Like IRS agent's going to come over and be like, what did you pay for that? And I said $5,000. He'd be like, that's not reasonable. Right? Like, but he's going to be okay with a reasonable cost, right? Of what that is. So like I said, IRS agents are very reasonable, to be honest with you. You just have to give them some kind of reasonable response. There's something called also the Cohen rule, which is if it's a reasonable expense for the industry you're in, like they have to take it as deduction. This is an old rule, like mainly because somebody took deductions where they paid cash and there was no receipts. And so like you can kind of, I mean, I would say never use cash. I'm not a Dave Ramsey fan. I feel like I say that all the time.
Me neither.
I hate Dave Ramsey.
It's like, let's manage these super scarce resources. I'm like, let's just make more money. It's fine.
Yes, exactly. I feel the same. But also he gives like really bad advice for like entrepreneurs, like, especially like if you're just starting out and you're starting up a business, like do not listen to Dave Ramsey because he says, use everything in cash. I'm like, whoa, slow down. Use credit cards.
Talk to an accountant.
Yeah. Use debit cards because an IRS agent, if you do get audited, they don't really care about receipts, honestly. Like receipts are not a thing. But if you see it on a bank statement or credit card statement, they're like, cool. That actually happened. It is a lot harder for cash transactions, honestly. But if it's a reasonable expense for that industry, then they have to allow it. But my point is, anyway, sorry, I'm going off topic. Direct expenses inside. So like your computer and everything inside of that office is 100% deductible. So apart from just home office, like allocating a percentage of all the indirect costs, you also have the direct costs that are 100% deductible inside your office. That makes sense. Which just reminds me, I have that carpet and I think I also paid for that personally. But anyways, so a reminder.
Another thing to place in service.
Yes, place in service. Because I just moved in here not very long ago. But at the same time, that being said, with like all the other stuff, expenses, when you're thinking about the industry you're doing, am I using it for work? Same thing for mileage, like or car, like you're buying a car, you can place it in service for your business. And then we just back out your personal use from it. So you're like, I bought this car and I use it mostly for work. Okay. You probably use it some for personal, maybe, I don't know, unless you just only use it for work. Like if it's your only car, there's going to be some personal use.
Sure.
So think about that when you're thinking about other things. Like what other expenses do I have that I personally use? We want to back out that personal use. That makes sense.
Yeah. I love it. Okay. All right. So deductions. And then I'm curious though, for you, it sounds like you just run a calculation. I'm just curious, like with the indirect, because a lot of people who have home-based businesses, they're like, do I do like the thing where I get all the bills or do I take the standard deduction? Is there a certain rule where the same way you're like, oh, if you're over 100,000 S-Corp for sure. Is there something where you're like, if your house is this many square feet or whatever, or is it just like talk to an accountant and have,
you know what? Because you can go back and forth between standard and actual for home office.
Yeah.
I always want my clients, they're going to give me both anyways. So I'm going to make that decision
Depending
anyway.
on what works better.
Right. Because like, for instance, with one car, if you buy a car, it's either standard or actual. You have to make that choice for that one car until you buy another car. And that's it. There's nothing else. Like if you choose mileage, we're only using mileage. I don't care what you paid in gas or repairs or any of that stuff. We chose mileage already from year to year. But with home office, you can go back and forth.
Okay.
So I always ask everyone for both. Like keep track of your utilities and repairs and maintenance on a personal level, just a spreadsheet, whatever that may be. And it doesn't, like I said, it doesn't have to be perfect. Like, oh, I pay $200 a month for utilities and it goes up to $250 or whatever. We can average it out to lower a more conservative number just to be reasonable, or you could just get totals. It doesn't really matter to me necessarily, but when you get those numbers and you see what those are, we're going to make decisions because either way, you're going to need to know your office square footage and you're going to need, and then we might as well know the total square footage to see which one's best because the standard deduction is based on your office square footage anyways. So it's like, give me all the numbers and let me know what you pay for rent and everything else. And then let's see what's best, right? Because sometimes it's better, one way or the other. But most of the time, to be honest with you, rarely ever do I see the standard being better. Usually it's the actual number. And that's probably why I asked for both. Yeah. Most of the time it is.
Okay. And then I'm curious, I'm realizing now when I think I asked this person from before the question they had when to hire a CPA and then when do quarterly payments start. I'm curious, like, because I know when just my husband and I were employees, we totally just did, I forget, what's the software where you just do it yourself? QuickBook or no?
Yeah, TurboTax.
TurboTax. Yeah. Like we just did that because like it wasn't complicated, but now like I don't know, since like we did real estate investments, we have K1s, I've got my own business. It just like seems obvious that I should have an accountant or at least like those are I'm just like, I don't want to deal with it. Like, and I want to give it to an expert who like can look and all the things that you're seeing today. Like I want someone that can see those things and point out like areas where I could like save or different things. Like, would you say anyone who's like just started their own business should be working with an accountant?
Oh, absolutely. Yeah. I mean, I wouldn't hire you as my plumber. Like I just, I don't know. I don't know anything about plumbing, or I don't know if you do too, unless you're a plumber, but like, I don't know if someone else should be doing their own taxes. It's just too complicated of stuff. Like even just this year alone, we've had all these new tax law changes. Like even when I even start mentioning it to people, they're like, what? Like as a self-employed person, you can take sick and family leave on your return for 2020 in 2021 and take 10 days of sick leave based on your self-employment income. And people are like, what? And like, is that not being asked on TurboTax? I don't know. I have no idea. I just know that because I have to do continuing education all the time and keep up with tax law. So I know as a self-employed person, I'm telling my tax preparers, like anyone that has kids, let's just take family leave. I'm not even going to ask them. Let's just take 10 days. Like we all know we were so crazy. Anyone that had children, I'm just taking family leave. And then of course, anyone else that doesn't have children, I'm calling and be like, were you sick? Did you take care of someone sick? Do we qualify for the 10 days of sick leave? And then we make those decisions. But I think you might be missing out on some of those things if you're self-employed. I can't even imagine it's even asking that, to be honest with you. But I haven't, like I said, I haven't tried to do them. But I think my assistant didn't know that. She didn't know because we have to go into our tax software and go to that form and actually say, yes, we did, and to get that credit. So, but like I said, I don't know how anyone's managing those kind of things. Like if you're not an active tax preparer and keeping up with tax law, you probably shouldn't be doing your own tax return, I don't think.
Yeah. Well, and I think I learned a little bit ago when you're like, oh, like the H&R Block, they just people train for 2 or 3 months and they're like, you probably wouldn't want, like, that's not the path either. If you really want someone who's like aware of, I don't know, I've just learned a bunch of stuff just listening over the past hour. So like, yeah, maybe just hire a professional. Right. All right. Super helpful. I mean, I think there's already like, we've covered a bunch of the deduction stuff. I got a question. It was like just the 3 biggest ways you see new businesses not harnessing tax advantages to their fullest potential. So I don't know, are there just like a few little like fun little tax, like, I mean, you just shared that one. I think that at least is one of them, the like sick and family leave.
Yeah, that's one of them. I mean, I feel like there's a lot of things like when I start talking to some people, especially like a lot of travel bloggers.
Uh-huh.
I was talking to this one travel blogger that they were like, I had to convince my CPA to let me take my car, and I was like, whoa, whoa, whoa! I've seen on your blog that you had a van. Like, you should expense. Like, what are you doing? Like that, you know? So it was like that kind of conversation. I think that like anything related to your industry and what you're doing, like think about the things that you're doing for work that is directly affected. I think those kind of things are important to look at. I lost my train of thought, but you were saying something else.
Just like tax ninja move, like just like things for new entrepreneurs that like if they're new in business, they wouldn't even think. So I think it's like just a good rule of thumb. If someone even has the question, can I deduct this as a business expense? Like it probably is, or at least partially.
Probably, right. That I think is a big thing, is like, oh wait. And also, like I said before, not necessarily using cash for things, like using everything on either debit or credit, because that is a way that you're going to keep track of all those costs. I think when people are like, oh yeah, I took a cash and did this, I'm like, whoa, like how do you know what you spent on or whatever? And it's still a good trade, not even just a good tool to see how much money you're spending, but then also deciding what I can and can't deduct, right?
Sure.
Like what those numbers look like. I'm not a big, I think the other thing that I always talk about when I talk to new clients is that like, I don't keep receipts at all, except for like really big purchases or places that that sell a lot of different things, right? That would be the only thing, like Amazon, but Amazon gives you receipts online, so who cares? But like, for instance, like I went to lunch a few years ago with like another CPA, and we went to like Panera Bread or something, and I paid for it, and she said, "You're not going to keep the receipt." I was like, "There's only one thing you can buy from here, unless I'm buying the oven in the back. Like, why do I need the receipt?" And she was like, "Oh my god!" And she was older than I was, but she's like, "You're so right," because it's just like ingrained in our brain to keep receipts, but like we don't really need it if you're using a credit card. You don't.
I love it because I told Instagram, I was like, this isn't a mindset podcast, but I feel like one of the things we're learning is that like, it just seems like depending on when you got trained in accounting, you have a certain mindset and you might be like a super stickler about things. So maybe.
Well, I'm kind of old, so I kind of got the old school and the new school, but these things going forward, and we're always trying to be progressive about the industry. And so I try to keep up with all the new things. Now we do get kind of in the old habits. I think that's generally everybody. So I try not to stay in those old habits and learn new things. And one of those ways we do is like, we talk to other accountants and we talk about what we're doing and those kind of things. And I like to talk to IRS agents a whole lot about different ideas. And so that also gets me going too.
I love
they
it.
Don't care.
Anyone who's listening, I don't even ever think about the IRS, but I just feel like, I don't know, like everybody should know she's got a very great relationship. If you ever need an accountant that like,
I don't know about great relationship. I don't know about great, but I am able to talk to, they're all really nice people, but it's just one of those things that you just have to keep, asking questions. And so if I do ever talk to I say that I do have like IRS agents that I do regularly talk to for various different reasons, but like I do pick their brains on about a lot of things. Like if we have a question, I'm like, I have a question for you real quick. What do you think about XYZ? So it's interesting to kind of pick their brain about that kind of thing.
Well, that's, I don't even think about like in different industries, how it's like helpful for you to have relationships like that so that you can like, I don't know if you're like, how do you think this works? It's like, oh, you have a direct line to someone that could be like, oh, this is how we think about it from like the government side. So good.
Right.
All right.
But you were saying also, I was going to say some other ideas of other things. It's so hard to say, but one of the things that I always other than the Cohen rule about like just the reasonable expense that your industry, I think just that alone and that mindset of thinking about those things in that industry, I think that changes things for people. Like there's just so much more stuff you could look at and do from that perspective. But anyways, I just wanted to reiterate that.
Yeah, I love it. Well, so that closes out like all of Instagram's questions. I have one, I'm just curious I just started, I think, like I'm working now with she's like sort of a high level VA stretching into an OBM. But my question, as I've been thinking about her, she's working for me as a contractor right now, and I love her and I want to help her stretch into that like OBM role. But she's a contractor. So I'm just super curious can I invest in like a coach for her or like training as a business expense? If she's a
Yes,
contractor?
absolutely.
Yeah. Okay.
Yeah, absolutely. You can definitely invest in anything. I mean, any kind of benefit for that person that's going to benefit you. You
Yeah.
want, and you're paying for it out of your pocket. That isn't 100% deductible.
Okay, cool. I mean, I figured it would be, but I was like, I don't know, because she's like a contractor for me versus an employee, but okay, I love it.
Yeah, absolutely.
Okay.
Yeah.
This is so fun. Well, I hope everyone take a deep breath depending on where you are at with money. And if you're just like, oh my gosh, there's all the things, where can people come and find you and work with you?
Well, I have openbookkeeping.co as my website. I mean, you can find me on modicpa.com also, but that right now it just directly goes to my openbookkeeping.co because I'm still working on it.
Sure.
But you can go through that. I do have on there, it does say like monthly pricing, I think, but I do have hourly pricing for clients that are just starting out and, consulting fees separately from that. I just haven't finished that side of my website yet.
Yeah. I'm curious though, for people, because I think we're at the time of year, if someone's like, oh crap, like they were maybe going to just like slap together their taxes with TurboTax or something. And now they're like rethinking that. I know we're like super close, right? Would you even be available to do returns for people right now?
Possibly, yes. Okay. So it depends. So in Texas, the deadline's June 15th. So we actually have a couple of months. The deadline for anyone out of state is May 17th. So there's a big chance that if you come for me from a different state, we're going to be like, let's extend it. If you want to make a payment and let's just do a quick estimate, let's extend it because that's like in 2 weeks. Right.
Yeah.
But the Texas deadline's not till June 15th. So we still have time to do the Texas deadline. But yeah, I'm happy to help as much as I can for anyone that wants to call me.
Yeah, I love it. Well, I feel like it was very helpful for people to like get us. I think even if nothing else, right? Like LLC, everyone, it takes 20 minutes. Just like go do it. And then if you're making over $100,000, S-Corp, that was very helpful for me.
LLC is with the Secretary of State. And so it's usually not that difficult in your state. And most of the time you can do it online. So it's not a very difficult, it's like $300. It's not a very difficult thing. Now, the only hard part is a registered agent. Like you have to have a physical address for someone to serve you papers. Like you can't just have a PO box, and that's public information. I offer a registered agent address for any of my clients. So I have a lot of clients that are under my address. So that way people don't know their personal address and that's not public information, but that's up to you. Some people don't care about that. Some people do care about that. And it's always an issue.
So interesting. I love it. All right. Just another thing to keep in mind. Now I'm like, oh, is my stuff publicly available? Anyway.
Yeah, you should look. Make sure you have a registered agent. Right?
Yeah. I love it. All right. Thank you so much. People, everyone go find the links to go and talk to her, work with her in the show notes. And I'll see everybody next week. Bye. Thank you so much for coming on.
Thank you.